Hi everyone, Michael here. In this video, we're going to be going over the latest remarks from legendary economist and Nobel Prize winning economist Robert Shiller about his thoughts on the housing market, stock market, and cryptocurrencies market. Now, if you don't know who Robert Shiller is, you definitely should. You know that index called the Case-Shiller Home Price Index that tracks all the house prices in the US for the national, the top 10 cities and the top 20 cities. He was the man that created this index in the 1980s. He's been named one of Bloomberg's most influential people in finance, and he's also a best-selling author on how markets are not rational, they're irrational, and he also wrote great articles like Irrational Exuberance and books like Irrational Exuberance. He's an expert in studying market psychology and studying the history of markets and studying booms and busts. He predicted the dot-com boom, the 2007 housing market meltdown, the subprime mortgage crisis, and he also predicted the top of the 2017 cryptocurrency market bull run. Okay everyone, so let's have a listen to what he's got to say on these markets in his latest interview.
I did write about the Roaring Twenties. There are times in history when we have more latitude for our emotions and more social excitement. And it seems like this is in one of those periods.
Okay everyone, so this is huge. He's comparing our time today to like the Roaring Twenties before the Great Depression. And he talks about how there was so much exuberance, there was so much excitement in the markets in the 1920s. You know, you're seeing people become millionaires overnight, like what's happening right now with the cryptocurrency millionaires. And you're seeing lots of people that never invested before, never been in the markets before. They're coming in thinking it's easy money. And like the shoe shine boy analogy, where the shoe shine boy starts talking about stocks to the stockbroker, he knows we're getting very close to the top here. And this is what I'm seeing in my own personal life. I'm seeing my barber talk about it. I'm seeing, my physiotherapist talk about it. Everyone that doesn't normally talk about the markets is talking about the markets right now.
Trying to posit here a whole different outlook to economics, but it's not original anywhere. They talk about market sentiment, that sometimes people get excited, and then all sorts of things happen in distant markets. It's now just a new record in real terms. The home prices have never been so high. My data goes back over 100 years, so this is something.
So everyone, he was the person that created the Case-Shiller Home Price Index, him along with Carl Case. So when he says the markets are at all-time highs, we're in crazy territory, just like he predicted around 2005, 2006, before the subprime crisis meltdown. And again, he's literally the man that wrote the book. So if he's saying we're in a housing market bubble, we definitely are. There's no ignoring it anymore.
Now, we naturally look at the Federal Reserve as a source of stabilization, but I don't think that the whole thing is explained by central bank policy. There's something about the sociology of markets that's happening, and then there's the question whether they can stabilize it without causing it to crash. That's hard to do.
Whoa, shots fired there at the Federal Reserve. So he's saying, look, it's not just the central banks that are doing this, which is true, but they are playing a big factor. He's saying a lot of this is the exuberance, it is the FOMO in the housing market. It's also the supply shortages for building a home. So if it's really expensive to build a home, people are going to want to buy existing. There's crazy low supply. But he is saying that we're going to have inflation, and it's very hard to stop inflation without crashing the markets.
Well, I don't know that this market is going to react immediately. It's not like the sudden breaks that occur in the stock market. But if you go out 3 or 5 years, I could imagine that they're substantially lower than they are now.
So everyone, what you have to know about the housing market is it's very slow moving. It's not like the stock market where we can get a 10 or 20% crash in a week. Things are very slow moving with the housing market because it takes a long time to buy or sell, a long time for those transactions to go through, and then we have to wait for the data. But he is saying in 3 years, house prices are not just going to be a little bit lower than today, they could be substantially lower with all the crazy building that's going on. This is not just happening in the US, this is happening in Australia as well. So right now, the reason why house prices are going up so much is because there's so low supply. But always what happens is once the house prices boom, builders all of a sudden come out of the woodworks, no pun intended, and then they start building homes like crazy, and then eventually we get an oversupply. Now you may think, okay, well it's not going to crash this year, so I won't care, I'll just buy my house. But think to yourself, it's very expensive to buy and sell a house, and even if you buy now and you have to pay 20% above asking price, most people live in the house for at least 7 years. So if you buy now, and even if house prices don't crash this year, in 3 years, your house is going to be worth a lot less, according to him, than right now.
And maybe that's a good thing, right? Not from the standpoint of a home owner, but it's from the standpoint of a prospective homeowner. It's a good thing. If we have more houses, we're better off.
Okay, everyone. So now he talks about the cryptocurrency market.
Thinking of buying them to experience the effect. A lot of people do that, actually. They'll take an investment, because then once I take it, I know I'll think about it.
Once you have skin in the game, right, then you'll actually pay attention to it.
But
sure.
I never bought Bitcoin. Maybe I should be active in that market. I think about market psychology, and I think that's a very psychological market. Yeah, it's impressive technology, but the ultimate source of value is so ambiguous that it has a lot to do with our narratives rather than reality.
So studying behavioral economics, right now, you would not be a buyer of Bitcoin. For now, you're staying away?
Yeah, I think so. I think that the technology is interesting. Someone will find something very useful to do with something like that. But it may not be Bitcoin.
Well, everyone, so he's talking about the cryptocurrency market, and he says this is a very psychological market. You're seeing people who think going to the moon, and if they're not going to the moon, Bitcoin's going to zero. There doesn't seem to be much in between here. So he's very interested in the cryptocurrency market, but he says he's not investing at the moment because it is so hard to value Bitcoin, and there's not really much history of cryptocurrency, and there's not much data for us to go off because we've only really had 2 or 3 cryptocurrency cycles. And so again, in this article, he says the Wild West mentality is gripping housing, stocks, and cryptocurrencies. And it says here, even though the record run in stocks and cryptos has been taking a break over the past couple of weeks, Shiller is worried. He's particularly uneasy about the latest housing boom, like he talked about in that video. And it also says here, Shiller, who viewed stocks as highly priced going into the year, warns inflation fears could ultimately push long-term assets lower. And people, what you have to know is in the markets, we're at a very, very critical point. And there's so much uncertainty because the Federal Reserve is not being transparent with the markets and is not being transparent with us on exactly what they're going to do. They're saying inflation is going to be transitory, but all the data is pointing that it's not. They're saying they're going to keep monetary policy loose and not lift interest rates till 2023, but the markets don't tend to believe them, and I don't tend to believe them. And I think inflation risks are going to get worse. And the thing that I'm most worried about that could keep the bubble going is the Federal Reserve lets inflation run hot. And what you have to know with inflation is they changed the way they report inflation in the 80s, then they changed it again in the 90s. That's why it looks like inflation has been so low over the past 20 and 30 years. If you look here at shadow stats, based on the 1990s way they used to calculate inflation, the CPI year over year is actually 8%, much higher than the 4.2% official number that's been coming out. But even that is double the Federal Reserve's mandate. So if inflation does run hot, and if this fear, like he says in this article, does come true, and the Federal Reserve has to start lifting interest rates to combat inflation, remember in 80s when interest rates went up to 17, 19%? Imagine if that happened today, but we wouldn't even need that. All we'd need would be 2% lift in interest rates, and we'd see a complete sell-off in the stock market, in the cryptocurrency markets. Even precious metals would sell off because we'd see a strength in the dollar, and the only thing that would go up would be the dollar. And this is why I'm building cash reserves on the side. So when it does come time for the Federal Reserve to lift interest rates and assets fall, the dollar will strengthen, and then I'll have cash in there to go and buy the real dip. Not these 1 or 2% dips. You're seeing people buy the dip, and then it turns into a 15, 20 layer dip. For me to even start thinking about putting money in the stock market, I'd want to see at least a 20% correction. And what I think is going to happen in the cryptocurrency market is we're going to enter in a bear market. Now, hey, I could be wrong. This is just my thoughts and opinions here, but this is just what I think after looking at all the data and studying history and studying past bull and bear market cycles in the stock market and in the housing market and in the cryptocurrency markets. and looking at the macroeconomic picture. And for me to start thinking about putting money back into cryptocurrency again, I'd want to see Bitcoin between $20,000 and $15,000. So everyone, again, I just want to echo the thoughts of Robert Shiller. We're in irrational exuberance in the markets right now, especially in the stock market. There is a bit of fear now starting to come in the cryptocurrency markets, but we haven't hit peak fear yet. And again, I just want to say we are at a critical point in time in the markets. And it's all going to come down to, will the Fed fight inflation or will they let it run hot? What do you think? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you all up to date on the latest happening in the stock market, housing market, and cryptocurrency markets. If you're bored, I'll put up some of my other videos here. I'll see you there.